Emotional alchemy is live. The trading world's purple poison candle is ready to strike. Do you often lose your way when market structures shift? Do not worry, this video will help you unlock the vector candle reverse sniping technique. Hello everyone, welcome to the Inventor's Strategy Selection channel. The market is never a cold numbers game, but a true reflection of human nature. Behind every massive transaction, there is the most primitive emotion of investors, panic selling regardless of cost, and crazy chasing during greed. Market psychology analysis reveals the essential rules. When the public fears the most, it is often the best time to buy. When greed reaches its peak, smart money usually chooses to exit. This pendulum effect of emotions provides reliable basis for contrarian investing. Today's vector candle, combined with structure breakthrough strategy, quantifies these psychological principles into actionable trading signals. By identifying volume anomalies, vector candles represent structural changes. This strategy captures critical turning points in market sentiment from a behavioral analysis perspective, distinguishes between institutional positioning and retail traders, and helps traders make more rational decisions. This is not just a technical strategy, but a practical application of market psychology. Let us explore the core logic of this system. The vector candle, combined with structure breakthrough strategy, is essentially an intelligent trading system based on market psychology and capital behavior analysis. From a psychological perspective, each vector candle represents a concentrated outbreak of market emotion. When panic reaches a critical point, massive selling creates red vector candles. When greed dominates, crazy buying pushes green vector candles. Behind these abnormal volumes is the game between emotional retail trading and rational institutional positioning. The strategy works on three psychological levels. First, the emotion recognition layer identifies market sentiment transitions from calm to excitement by calculating average volume and setting thresholds at 2 times institutional level and 1.5 times following level. Second, the behavior interpretation layer, where red chalk reflects psychological shifts from optimism to pessimism, while green boss shows emotional escalation from caution to frenzy. Finally, the capital confirmation layer requires multiple consecutive vector candles to confirm trends, simulating capital's journey from testing to commitment. The strategy adopts contrarian logic because when market panic reaches extremes confirmed by red chalk, it is often the best time for capital reallocation. When greed becomes excessive, confirmed by green bows, smart money typically begins to withdraw. This design cleverly utilizes the reversal effect and mean reversion principle from market psychology, helping traders rationally identify market sentiment and make appropriate trading decisions. Before diving into the core logic, let us understand these parameters from a market psychology perspective. Each parameter setting actually simulates and quantifies the psychological characteristics of market participants. The length parameter defines the volume look-back period, essentially establishing a normal baseline for market emotions. Just like a psychologist needs to understand a person's normal state to identify abnormalities. If this period is too short, we might be misled by minor market moods. If too long, we might miss key emotional transitions. The vol multiplier parameter sets the critical point of emotional intensification, quantifying the threshold from calm to excitement. When volume exceeds the average by 2 times, it means the market has shifted from rational trading to emotional trading, signaling significant capital flow. Setting it too high might miss early signals of emotional turning points, while setting it too low could lead to confusion from false prosperity. The confirmation candle's parameter reflects the herd effect in group psychology, where a single abnormal behavior might be coincidental, but continuous abnormal behaviors often represent a real change in collective psychological state. This parameter filters emotional noise in the market, ensuring we capture genuine psychological turning points rather than momentary impulses. The evog-vol represents average volume, serving as a benchmark to measure normal trading levels and identify whether current volume is abnormal and driven by real emotions. In practice, these parameters need adjustment based on different market psychological characteristics, just as people from different cultural backgrounds express emotions differently. Vector candles directly map market psychological states, with each color representing different capital psychology and behavior patterns. From a psychological perspective, red vector candles reflect concentrated releases of market panic. When prices fall with surging volume, it typically means fear has overcome rationality, with many position holders choosing to cut losses. This behavior demonstrates the ultimate manifestation of loss aversion psychology, where investors prefer taking certain small losses rather than facing potentially larger ones. Green vector candles vividly portray greed, with price increases accompanied by massive volume, reflecting the spread of FOMO, fear of missing out emotions, as investors chase higher prices regardless of cost, afraid of missing the last opportunity. Blue and purple vector candles represent more moderate emotional fluctuations, capturing the transitional states from rational to irrational market behavior. The genius of this layered design is how it divides complex human nature into different intensity levels. Institutional level emotional outbursts 2 times volts alum often accompany major portfolio adjustments by institutions, signaling potential significant market changes, while following level emotional fluctuations 1.5 times volts alum more often reflect retail emotional trading. From a capital flow perspective, vector candles actually visualize the game between smart money and dumb money. When most people panic sell, it is often a good opportunity for value investors to build positions. When most people chase higher prices, it is often when profit-taking capital chooses to retreat. From a market psychology perspective, the formation of ChoCH and BOS signals actually represents critical nodes in the transition of collective psychological states. The appearance of a red ChoCH signal represents the critical point where market psychology shifts from relative stability to panic. When a vector candle not only carries huge selling pressure but also breaks through previous support, it means market confidence has developed a structural crack. Behind this price action is the complete collapse of investors' psychological defense lines. The loss of support makes even the most persistent participants doubt their judgment, accelerating the spread of panic. The green BOS signal reflects the key moment when market psychology shifts from caution to frenzy. When a vector candle carries strong buying energy breaking through previous resistance, it marks that market optimism has overwhelmed rational analysis. Such breakthroughs often trigger a chain reaction of FOMO emotions, bringing more capital into the market. The confirmation mechanism introduced by the strategy embodies the principle of social validation in group psychology, where a single event might be coincidental, but continuous similar events reinforce market participants' beliefs. Requiring at least 2 corresponding vector candles during the confirmation period is actually waiting for a second confirmation of the market's psychological state. This design simulates the repeated confirmation psychology in human decision-making processes, effectively avoiding incorrect judgments due to momentary impulses. From a capital behavior perspective, these structural changes often accompany strategic adjustments by major capital. ChoCH may mean institutions are gradually building positions, while BOS may indicate profit-taking capital is exiting in batches. The signal generation logic of this strategy is deeply rooted in the core theory of behavioral finance, the pendulum effect of market emotions. When the strategy detects a confirmed red ChoCH signal and chooses to go long, this seemingly contrarian decision reveals a profound insight into human weaknesses. From a psychological perspective, when panic reaches its peak, most investors' decision-making abilities are hijacked by emotions, and they often choose to cut losses when they least should. At this moment, it is the golden opportunity for capital that can control emotions and analyze rationally to start positioning. This strategy design embodies the practical application of the fear and greed index. Be greedy when others are fearful. Conversely, closing positions when confirming a green BOS signal reflects rational judgment of market euphoria. When greedy emotions push prices to new highs, most investors are driven by FOMO to keep adding positions. However, experienced traders know trees do not grow to the sky, and choose to gradually exit when market sentiment is most optimistic. The psychological foundation of this contrarian operation is the mean reversion theory, where extreme market emotions are often unsustainable, and the market eventually returns to rational mean levels. The design choice to only take long positions without short selling is psychologically wise. Research shows that short selling often brings greater psychological pressure to investors, as theoretically unlimited losses can cause severe anxiety. A one-way trading strategy allows traders to maintain a relatively calm mindset, focusing on capturing upside opportunities rather than predicting downturns, which aligns with most investors' natural bullish tendency. This design reduces psychological burden and improves strategy execution consistency. In practical application, this simplified execution logic helps traders avoid analysis paralysis, the psychological trap of missing trading opportunities due to overthinking. The strategy provides a comprehensive visualization system that transforms complex market psychological states into intuitive visual signals. Red ChoCH signals appear below candles, green BOS signals above, and the 4 types of vector candles are marked with R, G, B, and P characters. This layered visual presentation helps traders build an emotional map, quickly identifying market sentiment states and capital activity levels, improving decision-making efficiency. The performance of the vector candle combined with structure breakthrough strategy in different market environments actually reflects capital behavior patterns under different market psychological states. In oscillating markets, investor sentiment often swings frequently between optimism and pessimism, and this psychological instability provides excellent opportunities for contrarian trading strategies. When the market shows excessive panic, Rational capital seizes this emotional imbalance to buy the dip when the market is overly optimistic. Smart money chooses to take profits. However, in strong trending markets, collective psychology often exhibits strong confirmation bias, where investors tend to seek information supporting existing trends while ignoring contrary signals. In this psychological state, the contrarian nature of the strategy may conflict with mainstream market sentiment, leading to premature position closures. The psychological basis for parameter adjustment is equally worth exploring. Increasing the vol multiplier parameter in highly volatile markets is actually raising the recognition threshold for emotional intensification, which aligns with the cognitive principle of needing stronger signals in noisy environments. Lowering this parameter in low volatility markets aims to capture more subtle emotional changes, avoiding missing early signals of market psychological transitions. Adjustments to the confirmation candles parameter reflect adaptability to the speed of group psychology transmission. Reducing confirmation counts in fast-paced markets is due to accelerated information spread and faster emotional contagion. Increasing confirmation counts in noisy markets filters false group behaviors, ensuring capture of genuine collective psychological transitions. The advanced application suggestion to combine with long-term trend indicators reflects multi-level cognition from a psychological perspective, recognizing both short-term emotional fluctuations and understanding long-term psychological trends, avoiding the cognitive bias of seeing trees, but not the forest. After comprehensive analysis, the vector candle combined with structure breakthrough strategy demonstrates unique advantages and limitations. For strategy completeness, it scores 3.7. Its strength lies in organically combining price-volume relationships with market structure analysis, forming a complete signal system. Its weakness is lacking comprehensive stop-loss mechanisms and money management modules, potentially facing significant risks in extreme market environments. Risk management performance is good, scoring 4.2. The strategy effectively filters noise through confirmation mechanisms and signal overlay requirements, reducing operational risk. However, it still lacks specific stop-loss strategies and position size control. Adaptability scores 3.5, as the strategy performs excellently in oscillating markets, but may underperform in strong trend environments, requiring traders to adjust based on market conditions. Understandability is the strategy's greatest advantage, scoring 4.8. The strategy logic is clear and intuitive, with vector candle and market structure change concepts easy to understand, and visual presentation is very intuitive, allowing even novice traders to quickly master it. Innovation scores 4.1. The strategy's greatest innovation is deeply integrating market psychology with technical analysis. The vector candle concept is not just a technical indicator, but a visualization of market sentiment and capital flow. By quantifying emotional intensification levels and group behavior confirmation mechanisms, the strategy successfully transforms abstract psychological principles into actionable trading tools with significant innovative value in psychological quantification methodology. Practicality scores 3.8. As the strategy is applicable to multiple timeframe trading, simple and intuitive to implement, but may require additional auxiliary tools in certain market environments to improve accuracy. Overall, this is an excellent strategy with outstanding performance in market psychology application, scoring 4.1, particularly suitable for traders focusing on market sentiment analysis and capital flow judgment. It quantifies market psychological changes, transforms complex human insights into simple operational rules, and has high practical value. Thanks for watching. If you have your own insights or improvement suggestions for this strategy, please share in the comments. Do not forget to like and follow. See you next time.